You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Crete.
Cool. So today I'm with Dan Shai, and he's going to talk to us about a lot of things in trading. And Dan basically worked for Sharp Trade, so he's going to have a lot of advice. He just told me a few moments ago he was trading for almost 20 years. Is that it?
Yeah, 20 years. Full-time, not that long. But about 20 years I've been trading.
So could you start with one quote that you like or that inspires you a lot?
That's a good question. It's sort of one of my own, if you'll allow me a little bit of ego. But when it comes to short-term trading, something that I always try to remember, and it's a little quote that I use, and I use it with other folks, is it's not about the one trade. It's about the many trades. And I say that because it's very easy for any one of us. I manage money that's not my own. Right. So, I professionally manage money, but it doesn't matter if you're a professional or someone new. It's very, very easy to get wrapped up inside one single trade. And the thing traders got to remember, it's about many trades. It's about, it's not about whether this trade will be a winner or a loser. It's about 100 trades, 200 trades, 1,000 trades over the course of a career. So that's one I always use is it's not about the one trade. It's about the many trades.
Yes, like using the whole picture.
Exactly.
That's cool. So could you introduce yourself a little bit more and tell us what's going on these days?
All right. Yeah, my name's Dan Shai. Started trading in '96. Didn't work out so well like many new retail traders. However, I started learning about money management, got myself sort of straightened up there. As far as for income and working and trading for income, that didn't come for many years. I had to get my skills first. My wife worked part-time, actually full-time for a long time. And then as trading started taking over and I started getting everything down there, she went down to part-time and then no work. And so for a long time, I tried to educate others just by, just on my own. That was a lot. I had to do the legal work. I had to do the accounting, I had to do the taxes, I had to interact with the customers, then I had to create the content, and then I had to trade. And so about a year ago, sharptrade.com, and that's sharp like sharp ratio, so it's SHARPE.com, or the Sharp Trade LLC got a hold of me and said, hey, how about you trade firm money, and we'll take care of the taxes, and we'll take care of the customers, and we'll take care of all that other stuff, and you just write articles and trade and coach. And so that's what I've been doing for about the last years. I've been with Sharp Trade LLC.
Cool. So let's go back in time now. And could you tell us how you started trading and maybe why?
Funny story there. As there is probably with many of us. I was working I had just gotten married. I was married in 1996. And as many people who are married, I was in a lot of debt. And one of the guys I worked with, a really good guy by the name of John, came by and he said, hey, I got this book I want to show you. And I think we could make a lot of money with it, to which I instantly thought, ooh, money. I like money. And so he showed it to me. It was on commodity futures trading. It was a good introduction to support, resistance, just the basics. Nothing about money management, though. And I just sort of got hooked. It reeled me in from that moment on.
And then how was the learning process afterward? What happened after?
Well, blew up a lot of money, as sometimes new retail traders do, and lost thousands and thousands. And the folks that I was doing it with gradually were disinterested. They, it was like, okay, well, I'm not going to make my instant millions, so, inside of 2 months. So I don't want to do this anymore. And I was just sort of left by myself to do it. But I was really passionate about trading. I loved it. I love the markets. I love tuning into them. So I kept with it. I kept at my skills. Finally ran across a gentleman many people know, he's won world records when it comes to trading, by the name of Larry Williams. And Larry Williams is the first guy I sort of mentored me and said, you know, you got to get your money management. You got to track your trades. You got to track how accurate you are. And I started listening to that. Still took me about 3 or 4 years to get just really consistently profitable, get my psychology on straight, really understand that, you know, not get pulled into that one trade. And, you know, from there, it was probably about 2004, 2005 before I became consistently profitable.
Okay, so still a long time, about like 9 years to
Yeah, it was 9 years. I'll say this. If you're new, though, don't get discouraged and think it's going to take you 9 years, because the state of investing in trading education now has greatly improved. When I started, there was no, I'm going to sound like Grandpa Simpson here a little bit, but there was no internet to tune into to read about trading techniques. You know, you had to buy some book and have it shipped to you, and there was just not the ready access of information. And now I think new retail traders, if they really tune in to, you know, to what will make them profitable, psychology, money management, and maybe a few methods, they can become profitable so much faster than what I sloshed through.
From your experience, how many years would you say it take for a trader to become profitable?
That's a good question. I heard a bond trader I know down south say this one time, and I think it's true. He said, you know, no one, you know, because we do coaching and things like that at Sharp Trade. He said, nobody can turn anybody else into a trader. That's something that each person has to do for themselves. And I really do agree with that. So I think it varies from individual to individual, because trading is such a psychological game. It really is. So I have mentored folks that literally had it inside of like 24 months, 2 years. Some folks it took a bit longer. Some folks it took, you know, 3 or 4 years. But I would say around average anymore, within 24 months. But again, it goes back to that caveat. Everybody's got to turn themselves into a trader. You know, they've got to get their own mind on straight. And I've seen folks that can just never let go of the need to want to be right about every single trade. And some folks, if they can't let go of that, they never make it.
Mm-hmm. I think that's really interesting. I like the quote for sure. So how did you become profitable? Was it only by reading books and meeting with your mentor? Or?
Nope. I had to be taught a very painful lesson in the markets, and that's where everything turned a corner for me. I call it my never again moment. And what happened was I was starting to be consistently profitable. I was trading. Everything was going great. I understood about accuracy rates as it relates to a risk-reward ratio and focusing on that risk-reward ratio. And I was doing really good, and I got on a good winning streak. But I didn't have my mind on straight. I thought it was, I still, even knowing money management, you know, knowing good methods of trading, I still thought it was about being right. I had to be right on every trade. And what happened is, I want to say this is around 2003, 2004. I can't remember exactly. It's been some time. I can still remember the trade as clear as day. I was long contracts of July soybean oil. So this is commodity futures. And I had been on a wonderful winning streak. I mean, like 12 trades in a row, all awesome winners. And I got involved in this trade. And what had happened in my mind is I thought, well, obviously I get involved in the market and it just turns into a winner. And it moved against me. And then I was at a small loss. And I refused to accept psychologically that I was going to be wrong about this trade, because the parameters lined up exactly like all the other trades. And that one trade wiped out my entire account. I kept on saying, it's going to turn around. It's going to turn around. It's going to turn around. And so it wasn't about the method. It wasn't about the money management. The problem, I'm trying to remember the year. I think it was like 2003. The problem was my psychology. I refused to just say, well, I'll just take a small loss here and look for the next trade. I wanted this trade to be right. I got a margin call, and then I got another margin call, and it wiped out everything. And I just stood there, and when I walked away, I was disgusted with myself for about a month. And When I came back and I looked at it, it's like all I would have had to do is, according to my method, when the thing said this thing's going to be a loser, is accept a small loss, and I still would have been way up. But because I wasn't willing to do that, my entire account got wiped out. And so it was after that point, to answer the question, it was after that point that I realized it's not about being correct. It's about a good risk reward ratio. When you win a buck, or $2. When you lose, lose a buck. Just that sort of ratio. And if you're going to be a loser, who cares? Cut it, move to the next trade. And so around 2003, I think, I always call that my never again moment. Never again will I try to think that it's about always being right and let that just wipe everything out that I did. And everything sort of, that's sort of the moment where it all turned a corner and I got my head on straight, funded an account, and that has never happened since.
And how long did it take to get a new account?
I raised the startup money pretty quickly, just raising a couple of $1,000 to $3,000, I think it was. I add money every week to an account, like I think it was $35 a week. So, only probably about, I actually walked away for about, I can't even remember. I want to say it's like 5 to 6 months. Didn't even look at a chart. Didn't want to, because I was just so aggravated with myself. But when I came back, it was probably, I was probably back at it and trading within another 6 months.
Cool. And now forward to today, what is your main trading style?
Oh, that's an excellent question as well. I run what's called a type. There's many different types, but I run what's called a risk parity portfolio. So there are two main trading styles. I say that to say a risk parity portfolio will have different things going on in it. So one of my accounts, I have 3 accounts. One of them is just to pay me an income. That's all it's there for. I pick up assets. We run a project at sharptrade.com itself that's called Sharp Income. It's for free. What it shows is setting up something for income, because trading isn't for income. Trading's to build up a pile of money. So I've got an income account that's very long term. Years is when I hold those assets. And the stuff I get paid is for income. Then I have a longer term investing account. That's anywhere from, I don't know, probably, I would say like the holding period for any one of the stocks that we buy, that's all stocks, would be like anywhere from 9 months to, I've held stocks in there for 3 to 5 years. And then I do my short-term trading. And short-term trading, I'm a swing trader. I'm a directional trader. I do correlation strategies a little bit. I do non-directional a little bit. But what I really love is directional trading. And that's what most new retail traders know. Buy low, sell high, buy low. And I'm usually in a trade for anywhere from, on short-term trading, maybe like 15 hours is what I'll be in a trade. Maybe a little bit more, maybe a little bit less.
By entering on the 4-hour chart?
Yes. The charts I use on my short-term trading would be like, I always check and see what's going on the higher time frames. But generally, like I really like the 4-hour chart, and I really like, and I customize this a little bit. You can do that with a lot of platforms now. I really like a 90-minute chart. So I like looking at those two charts, a 4-hour chart, a 90-minute chart.
And are you using any indicator or? Yeah,
I try to keep my indicators very, very simple. And
okay.
I don't clutter up my chart a lot. And this is something that sometimes I see happen with new retail traders. In the industry, we call it a Christmas tree chart because they put so many indicators on it, you can't even see the candles. It's like, where are the candles inside of that? So people actually may be surprised, and many of the best traders that I've met and interacted with in the industry keep their charts very, very simple. Matter of fact, I'm pulling up my 4-hour chart right now. I've got 2 moving averages on it, and that's it. I've got a couple of things. I've got an Aroon indicator at the bottom, Aroon. Aroon, I don't know how you mention that. But I've got that as a bottom. And then on the chart itself, I've got an 8-period moving average and a 50-period exponential moving average. That's it. And most of the best traders I've ever met keep it very, very simple on their charts. They don't try and complicate it.
On that same topic, what else do the best traders do?
The best traders do. The best traders do. That's a good question. The folks I've mentioned usually mention the same things that sort of bit me, back in 2003. We don't get married to any particular trade. We don't think this trade's going to make our paycheck. The best traders I've met generally do not use their trading account for income. In other words, they don't. They accept losses very, 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 very quickly, and they have something. Best traders also I've met have something else for income. Guys I've known in the hedge fund industry, they don't use what they're investing to pay themselves an income. I don't use like my trading accounts to pay my income, like my bills. It doesn't matter how successful you are, you still got to pay the electricity bill. You got to still pay, the cable and the internet and all of that. So the best traders I know will have something set up for income. Guys in the hedge fund industry, they charge fees. Guys that work for private companies, such as myself, that will trade the company's money, the company pays them separate from what's going on in that trading account. Some guys will have what's called an income account, like I mentioned earlier with our sharp income entry, that we do each Monday. They'll have stuff where they set up a bunch of stocks for dividends, and they get their income from that. I've known guys that one really good trader I know out in New York, he has real estate property. He's also in real estate. That real estate property pays him an income. But the trading account, and like I said, I can't think of any professional I've met that really uses their trading account for income. They've got something on the side paying them income, and that trading account, they just build it into a bigger and a bigger and a bigger pile of money.
Mm-hmm. So how can retail trader apply this in trading? Because I know most of the listeners of this podcast are probably wanting to trade full-time or either trading part-time. So how can they make sure they have enough income just from trading?
That is an excellent question as well, because it addresses a myth that we see a lot. And it goes back to what I had just mentioned. A lot of folks seem to think that we are paying our bills out of our trading account. And I see a lot of new retail traders, some of them are very skilled. If you're new, don't think, well, I'm not as, skilled as these guys, or look down at yourself. This is a business that's all about just skill. And if you can get the skill, and if you can get that, you can do a lot of wonderful things. So when I say new, I just say that to say, don't look down on yourself or anything. You may be one of the more skilled traders in the future, but to apply that for yourself, don't try to compare yourself to traders that have been doing it for 20 years. Because sometimes what we'll see somebody just starts out, they may have a lot of discipline, but they think, well, this guy over here who's been trading for 20 years, and I need to have everything he's got, and I need to be making the huge trades, and I need to be making this huge income, and they try to pay their bills out of that. So to apply to yourself, first of all, don't look at me or anybody else. Just look at your own situation. A lot of traders, such as myself, when they first started, there was like their partner, right? Like my wife, she worked full time, then she worked part time and there had to be a lot of understanding with that. I had to show her yesterday, I am profitable this month. So there was spousal income, and there's a lot of people that want to give people grief for that. Your wife works while you trade. Well, you know what? If you're a new trader, there's no way around it. You're going to need something to pay the bills. If you work, okay, that can be your income. You can work part-time or whatever it is you got to do. I highly suggest, and like I said, at sharptrade.com itself, every Monday we have this whole free project we're running for free. That's just, it's not an account that pays an income yet. But if you're a new retail trader starting off and you want to get, let's say you have a wife and I don't want her to work anymore, I'm going to also have an income account completely separate from my trading account. I'm going to build that up, and eventually it'll get to a spot where that thing's paying me income. Some people are calling that income investing now, sort of referred to as fixed income investing. I highly suggest new traders check that out. You can do short-term trading. Awesome. Don't compare yourself to me. Just build up the skill. But please, check out something like, fixed income. We're running sharp income or some sort of income investing account in a separate account, because then you can slowly build up to a stage to where, eventually, you can stay at home, you can trade your short-term accounts, and your income account's paying you what you need to pay the bills.
Yeah, just make it more
Exactly.
simple for
Exactly.
people.
Because mathematically, I mean, if you just think about it, the reason why professional traders do not take an income from their short-term trading account is because everybody has strings of losing trades. I had one in the beginning of this year. Just happens, right? Just when you turn professional, it doesn't mean you get all your trades right.
No, of course, because you have to be not right
Yes.
all the time.
And so, yeah, there were times where I had losing trades and one after the other. It's just statistics. And I would make my position size smaller. But the thing is, if you were taking money out to pay your bills and and you're in a string of losing trades, you're digging a hole that's almost impossible to get out of. So that's why so many of us will have something else up on the side, whether it be charging fees to clients or income investing or whatever it is, spousal income at first, until to actually pay us our income.
No, it makes sense. So now I want to jump into a topic. It's I guess will help new trader right now. So how can people start trading without, I would say, destroying their account? Is there a way to go around it, or you have to go buy it like in any case?
That's a good question because it's sort of I've talked with other very experienced traders, and that's a topic of conversation we'll have amongst ourselves. I was talking with a trader not too long ago, and we sort of bounced that idea around. I have had those moments, like my never again moment I talked about earlier. Every trader has. If professional traders aren't these magical, esoteric people that never run into these situations. We do. I think if you're a new trader, what I would tell them is don't be afraid to use smaller position sizes. Something we see far too often is their position sizing is way, way, way too large because they're trying to hit a grand slam. Be content at first with just smaller trades, smaller position sizes. If you get knocked around a bit, don't let it discourage you too much. Although, as I said, I've talked with other experienced traders, and we've almost said, is there any way around it? I mean, at a certain point, I'll tell you something. The best traders I've met, every one of them say they got to a moment where they walked away. Because every one of us have had this moment where it was like we just got we call it getting your face ripped off. We got our face ripped off. And so I'd like to say there's a definite answer to that yes, absolutely, you can avoid all of the pain. But just statistics states every once in a while you're going to have a big loss. Don't let it get you down too much. It just happens. Keep to money management. Money management, we've got a free playlist on Sharp Trade's YouTube channel. That's huge for avoiding losses. If you're new, you want to avoid big losses, check out on sharptrade.com's YouTube channel, check out our money management playlist. That's the main principles, we would say, of short-term trading. It's the math of how you stay profitable. If you do get knocked around, I would say welcome to the club. I've talked with traders that even made much more money than myself, and every one of them said they got to this moment at first where it was like they just questioned themselves. They didn't think they could do it.
What's necessary in terms of money management?
Keep track of your trades. I would say when it comes to money management, keep track of your trades. A lot of traders they'll get into one trade, and it'll be a winner or it'll be a loser, and they don't keep track of it. They don't keep track of their accuracy rates. So I would say keep good records. Keep very, very good records because you want to be able to look back and see where is the problem. And money management, like I said, we've got that playlist on YouTube. But money management will show you the mathematics of staying profitable over time, but it's not going to help you unless you're actually keeping good records.
Yeah, and I think the good thing I like about it is you can track your trade online like pretty easily right now. So it's not a big deal.
It doesn't take long. Like I said, before we started talking, I had gotten out of this Euro CAD trade. I was long Euro CAD in Forex. I was running a couple minutes late just because I had to record the numbers. It took me 45 seconds to do in a little spreadsheet I keep. So it does not take long.
Now, what about trading psychology? What's the mistaken trader make? I think you've mentioned one, which is like the fear of not being right all the time. But is there anything else that's important in trading psychology,
Oh
you
yeah.
think?
I think this industry primarily, trading, it's a psychological industry. I've got charts I'm staring at right now. So yeah, you have to learn the charts. You want to learn how to read it, but at the end of the day, this is a psychological game. So I would say honesty, learning to be honest with yourself. It's sometimes hard to do. I've gotten into periods in my own trading. Over the course of 3,000 or 4,000 trades, you're just going to have down periods, and sometimes you have to just look at yourself honestly. And nobody likes to look at themselves in the mirror and say, "I'm the one messing up all these trades. It's not the methodology I'm using; it's me." It's not comfortable. So I'd say being honest with yourself. Again, as we said earlier, don't feel like you got to be right. You don't have to. What you have to do is just control your risk. Cut those losers. If you're in a trade this is something I'll tell folks. If you've been in a trade and your average time in a trade is 2 days, and you've been in this trade 3 days and you've got a small loss, marry time to it. Is it time to get out? Just accept the loss. Just cut it quickly. Look for another trade. The other thing I would say on the flip side, on the basis of psychology, is on the complete opposite end of the spectrum. And it's arrogance. Nothing can hurt you faster in this business than arrogance, because of a string of winning trades. And I can say that usually my worst losses have always come at the end of a long string of winning trades, because it gets in your head. You think, I'm just the trading stud. I can trade anything. Throw me anything. I can trade anything. And it's about that time. The market has this wonderful way of keeping you humble. Doesn't matter how big you are, and it will. So I'd also say on the psychology basis, just be very, very careful of getting too confident and arrogant in your trading.
I think that's a big one. Sure.
Yeah, because if you think about it, anybody could have a string of winning trades. That's just statistics, right? I mean, you can come in off the street and knock one out of the park. But the thing about trading is you got to do that tomorrow and the next day and the next day and the day after that. And eventually you're going to hit those string of losses. So just don't get arrogant, because again, it's a psychological game. The person that's really got to turn yourself into a trader is you. And you got to avoid that arrogance. And besides, nobody likes an arrogant person, so it's just a good way to be.
True. So, what would be your advice for traders that are struggling right now?
Advice. The first thing I would just say to start off is that you're in a good time. I have referred to what we are experiencing right now. I've seen 20 years of this business is like the golden age of being a stay-at-home trader. It's never been easier. I mean, we had no charts and monitors when I started trading. We got literally like a piece of paper out and graphed it on graph paper. Or there would be like commodity price charts that'd be mailed to you. You have any tool at your disposal. The spreads are tight. You know what the quote is almost instantaneously. So that's the state of things. So my advice would be, don't let other people get in your head. There's a big, huge business in selling fear. Gargantuan business in selling fear. And there are people out there that like to and they make money doing it, right? It's like, sign up to our newsletter to find out about the next great collapse in the United States. And so what they're doing is they're not selling you how to be profitable for yourself. They're selling you fear. The people that buy that stuff are buying into fear. They're like, yeah, I want to know about a collapse, and they'll pay money for it. These are not people that make money in the markets. All they're good at is selling fear. Be very careful of them, because I've seen many new traders become so afraid of what might happen. They don't realize the honest truth that none of us can predict the future. I can't predict every trade I get into. I'm scared to death. I'm profitable. I've been doing good, especially in Forex lately. But I respect the fact that I can't predict the future. I say that sometimes I'm just playing static. I'm just playing the noise of the markets, and I apply a risk-reward ratio to that. Don't let, and I call them merchants of fear. They're selling fear. Don't let those folks get in your head. Honestly, there are some problems with high-frequency trading, but it is not what it's made out to be by the media. It's not. There's a lot of benefits that we have high-frequency trading, and there are problems to high-frequency trading. But I have heard new traders say, well, I'm not really profitable in my trading, and they try and place the blame somewhere else. It's because of manipulation. It's because of high-frequency traders. It's because they're listening to all of these folks that sell fear. And I can tell you, I've railed on about that in our public articles. It's just a bunch of verifiable nonsense. So my advice to new traders, just steer clear of that stuff.
And I think, I would say also, even in Forex, I think there's a lot of overcomplication. Like, you have educators or coaches trying to make it a lot more harder than it really is.
Absolutely. Absolutely. Yeah. Don't overcomplicate it. And I'll tell you something. There's something about Forex markets. I started trading commodity futures, and then I got into equities or stocks, and then a variety of methods. But let me tell you something. I only started Forex trading in 2011. And again, the arrogance, I came in as like, and especially I came in after a really good year. You're going to have good years, you're going to have not so great years, but just stay net profitable. And I came off the heels of a fantastic year. And I thought, Forex trading, of course I can do this. Well, my style of trading beforehand was melding fundamental analysis, and then I'd use some technicals. Forex trading, you can pretty much just do technical trading. And let me tell you something. I wasn't used to that, and I got involved in Forex. And I had been trading for like 16 years, and I made all of the same mistakes a new trader would make. I overcomplicated it. And I just got to this, again, moment where I said, what in the world am I doing? Like, I know better than this. I'm overcomplicating the charts. I've got Christmas tree charts going on. It's not this hard. And I cleaned up all my charts, and I've been doing fantastic in Forex trading with the help of a couple of other good Forex traders. I've been doing fantastic in Forex ever since. So that's a huge one. Don't overcomplicate, and it doesn't matter how long you've been in the markets. It's very easy for that to happen because humans love tools. So excellent point.
Would you have any book or any tools that you would recommend for traders?
I would say, as far as short-term trading, a book. I would say probably short-term, or Dr. Alexander Elder's book, Trading for a Living, is an excellent. For folks that are interested in longer-term investing in stocks, that is viable. Buy and hold is not dead. I've proven it many times over the years. And it's not buy, hold, and forget. It's buy, hold, and review. So you review it. I would say it's referred to as the investor's Bible. If you're interested in long-term investing, it would be Benjamin Graham's book, The Intelligent Investor. And I really like Jason Sweet's edition of that book. As far as tools, honestly, I wrote an article a few days ago. I think a lot of them are good tools. It just matters. You have to find the tool that you like. We're different people, and psychologically, I may not like one method where somebody else likes another. So find what fits you best as far as a tool.
And I guess the only way to know it really is to try it.
Yeah.
Like, see whether you like it. Yeah. That's cool. All right. So, do you have any goals in the future for your business or either your trading?
That's a good one. You have all these good questions. As far as goals, well, short-term goals, just I got myself, like I said, in a little bit of trouble. It's been a tough market just as far as the stock markets lately. Very tough market. A lot of big names out there are having a hard time, and I'm not knocking them at all. I mean, you look at David Einhorn, Pershing Capital, even Warren Buffett, Carl Icahn. It's been a very, very difficult year for many folks, and that's not to point at them and laugh. It's been a difficult year for everybody, and it's just a difficult market. So I pulled back about as much as the stock market did, and I'm just short term trying to recoup for that. Longer term, one of the great things about trading is how mobile you are, and the company itself is just moving forward. We're just a very small firm, but we're growing very well. So, just longer term, I would say along the lines of mobility. We're looking at opening up our own offices and things of that nature. So we've sort of got our eye set on that, just as far as goals for ourselves. And then, I'll tell you something. The real thing, because we're a small firm, here's something about trading capital, like firm capital. The trick is to make the money and get the money together. And then the trick is to manage it. Now, very briefly, what I mean by that is, you got to decide what level you want. Basically, folks may look to make, on an individual basis, if it's a pass-through entity split up among folks, maybe, $10 million a piece, all right? Not for take-home pay. Then what you want to do is manage that and just grow that responsibly. So there's a lot of portfolio management techniques to implement that. This is something that Stanley Druckenmiller has talked about. Wildly fantastic trader, about grinding your way to 30 or 40% returns, and then you can start aiming for those 100% returns. It's all in an effort to just make that pile of money grow to whatever each individual managing partner is looking for, and then you can sort of sit back a little bit, and there's some techniques that you can do that are a little easier. And then it's just about managing that larger pile of money from a wealth management standpoint. So that's sort of what we got our eye on at the moment.
So how can people find you, and what does Sharp Trade offer right now?
Thank you. Sharp Trade. First of all, it's not SHRARP. So you can find us. It's named after the Sharp ratio, which talks about seeking a return, but not doing so in such a way that you could hurt yourself. It's called risk-adjusted return. So it's sharptrade.com, SHARPE. There's an E on it, .com. We have a YouTube channel, Facebook page. You can find it all from that main page. And what we offer is two things right now. We're looking to add a third product. Our first product is a course on longer-term valuation investing. And that's looking at things like we'd mentioned the book before, and Warren Buffett style of longer-term holding stocks for maybe a year, maybe 5 years. How do you do that? How does buy and hold actually work with actual formulas, spreadsheets? We offer that. That's a course. Folks can look at what I'm doing. We also offer that as another product. We call that the Sharp Report. Look at what I'm doing each day. Right now, I'm in a very defensive strategy. As a matter of fact, I've got my eye right now on the December contract of the E-mini S&P 500 futures, because I'm going to base some decisions on if we break this support right here. And when I put in orders, folks can watch that. So we offer that as a product. We put out free articles each day, just what we're thinking about the markets. And each Monday, we put out also something else, another product we offer. This one's completely free, is about growing that free income account. How can somebody start off with almost nothing? I really feel for folks that don't have a lot to begin. How can you start off with almost nothing and over a few years' time build up an account that will eventually pay you an income? Income investing or fixed income. We talk about that each Monday. That's also at sharptrade.com.
What keeps you motivated in trading these days?
The love of the game. It turns into a bit, after a few years of just the game of getting. I don't focus on getting the exact bottom and the exact top in a market. What I focus on is my returns. I am zeroed in on percentage-wise, what does my performance look like? And the game of that, of tangling with the markets, getting in there. I'll tell you, I've been trying something for that. I've been profitable, got about 10 to 13% drawdown at the beginning of this year, which is statistically normal. The stock market had that, but I've been trying to recoup from that. So since June 30th, I've been clocking the stock market. And I've been trying this one strategy and it just won't seem to catch. So I'm beating the stock market, but it's like, no, I need to recoup that and I need to do way, way better. And so it's just that tangle, you know, I get in, I make a decision, I look to control my risk. How does that play out? Not on the market, not on the chart. How does that play out on my returns? How does that play out on the graph when I track out my returns? And just the love of that tangle and game, I don't know how to describe it. People are either bit by the bug or they're not, and I'm definitely bit.
Cool. So, all right, Dan, I have one last question for you. But before, I just want to remind listeners that all the show notes for this podcast are on desireToTrade.com. And you'll find the notes for this specific show on desireToTrade.com/sharp-trade. So that's about it. My last question for you now is, if you could give one piece of advice for people to thrive in trading, what would that one piece of advice be?
One piece of advice. Learn to unplug from the markets as well. Sometimes we get so wrapped up in the charts, and right now I'm zeroing in because the E-mini's like crossing my support line where I may make a decision. Sometimes we get so wrapped up in the charts, we don't know how to unplug. So I would say learn how to unplug. You know, because that can get a little unhealthy as well. It can damage relationships. So learn how to step away. Maybe even learn some lower effort methodologies where you don't have to be tied into the markets so much. I call it tick fever, when you're in a fever about every single tick of the market. That can be unhealthy and sort of damage your trading as well. So that would be a bit of advice. Just also, in addition to everything else, learn how to unplug and turn off the monitors and go for a walk.
How do you personally unplug?
Over the years, I monitor myself. I've learned to notice when that's happening to me. A lot of times what I'll do is, like, if I'm working a strategy right now, it's a short-term trading strategy. Every 30 days, there's something to do, right? About every 30 days, sometimes every 15 days to the portfolio. Once I make the move that I got to make for the time frame I'm in, and once the stops are in, I literally, the second it's executed, I walk away. I turn off the monitors, and I know, okay, this is a 15-day trade. I don't have to look at the trade again for another 3 hours. I will turn off the monitors, go out, be with my wife, enjoy a cup of coffee. Probably what I'm going to do, unless I have to make a move here off the E-mini. A little bit later today. If it's a 10-hour trade, I know I don't have to be looking at that trade every 3 minutes. It's a 10-hour trade. I might have to look at it like every half hour, every 45 minutes. So once I engage, once I've made a trade management decision, I literally turn off them, just click the little button and walk out of the office.
Sounds cool.
Of course, I come back in 30 minutes later.
Cool. All right. Thanks a lot, Dan, for this podcast. It's been a great interview. And for all the listeners, I'll see you in the next episode of the Desire to Trade podcast. Bye.
Thanks for listening to the Desire to Trade podcast. To get all the information on this show, free articles, and unique resources, make sure to check out www.desiretotrade.com and subscribe. Please leave us a review and let us know what you thought about the show. It's time to become the best trader you can be. See you next time.